You're not early to Bitcoin anymore because Bitcoin sold out to the institutions, the very same ones that it was invented to replace. BlackRock and all the ETF guys own about 6% of the total circulating Bitcoin. The US government owns 1%, China owns 1%. A bunch of rich people like the Winklevoss twins and Chamath and Jack Dorsey, they all own about 1% apiece. And on top of that, like 4 million Bitcoin has been lost. So there's really not that much out there, and it's not in the hands of the people. Why does that matter? It's because everybody's been tricked into thinking that BlackRock is going to somehow save them. And now all the volume is going through synthetic derivatives like the ETFs or the CME futures, and this can open Bitcoin up to manipulation, both in the long and short direction. Either way, it's clear to see that the volatility is being squeezed out. Bitcoin no longer has these crazy parabolic moves, and if you look at the chart, we could see that it's going up in a much more structured way this time, which is why I say this time the cycle is actually different. There are still chains like PulseChain that are uncorrupted by institutional money, but this is going to happen to every coin at some stage of maturity. See, Bitcoin no longer represents true supply and demand because the powers that be, they can naked short it, or they could use their massive amounts of capital to open both long and short positions at the same time and structure the charts in a way that's less representative of the actual people in a peer-to-peer free market. So when you're buying the ETFs, just know that you're not buying actual Bitcoin. You're buying paper, fake Bitcoin. Historically speaking, the governments have done funny business like manipulating the price of gold after the 2008 crash with COMEX, or even crashing silver, using paper silver. And now that you're not trading real Bitcoin anymore, they can flood the supply or the demand at will, and they can market it to you because they make fees either way. So they can get you excited about Bitcoin, which is why you're hearing about it on the mainstream media, and they can just as quickly decide to suppress the volatility and turn it in the other direction. This isn't some grand conspiracy theory, this is just how markets work, but that's why I prefer stuff that's earlier stages. PulseChain and even Ethereum have much more price potential and much more explosive growth power because they still get to experience that crazy exponential Metcalfe's law. Whereas Bitcoin, a lot of the opportunity is gone by the time you're hearing your banker recommending it to you, by the time Wall Street is on TV, on CNBC telling you to buy Bitcoin. Look for other opportunities, check out pulsechain.com.